After the dollar's sharp reaction to the US presidential elections in November last year, markets expect high volatility almost certainly in January 2025, but not necessarily growth for the greenback. The new president will take office on January 20, marking the start of his efforts to implement his campaign pledges. Donald Trump made numerous pledges. His threats to impose tariffs on the US trading partners span a wide geographic area. Hence, such high-impact events will trigger market turbulence. Nevertheless, keeping track of the current economic data remains essential. After all, the main trends are shaped by the economy itself. You're watching the Traders Calendar for January 8. Wednesday traditionally begins and ends with the reports on the US crude oil inventories. Despite the weekly nature, benchmark oil prices react sharply to this data. Oil traders are particularly interested in the evening report provided by the U.S. Energy Information Administration, offering a clear picture of the weekly changes in inventories. Flash estimates suggest inventories could drop by 478,000 barrels by January 8. Let's not forget that major central banks will again make interest rate decisions in January. The Fed Reserve and the European Central Bank are set to announce their decisions on January 29 and 30. The Bank of Japan will do so a week earlier. In this context, the Consumer Confidence Index released in early January could serve as an important signal for policymakers. Japan's consumer confidence is unlikely to improve on the back of the yen's protracted weakness. A further decline in this indicator could drive the yen lower. Germany's economy is also grappling with a decline in consumer demand and falling factory orders. However, the retail sales figure is expected to improve from a -1.5% to -0.1% from a year ago. Despite the improvement, consumption remains feeble and is likely to enable the euro's rally. In another report, factory orders in Germany continued to decline. A projected drop to -2% will certainly alarm investors, especially compared to the 7.2% increase recorded in September. This could put painful bearish pressure on the euro. Later in the day, Eurozone economic data is unlikely to give some support to the euro. The Consumer Confidence Index is expected to rise slightly by -14, just 0.5 points above the previous figure, which was the lowest since April. The euro is likely to remain under pressure from the US dollar. The Eurozone's Business Climate Index is also set for release, with a forecast indicating a rise to 97.2. While this reflects modest optimism, the euro may only consolidate at the current levels rather than develop a rally, as the traders await crucial US labor market data. Factory inflation is sliding deeper into negative territory, now projected at -3.3%. Falling inflation signals deflation risks and potential recession. Bad news for the Eurozone economy and the euro itself. The economic calendar for the US contains impactful data. The ADP report, which kicks off the US labor market data series, is expected to show that private businesses added 140,000 jobs in December, reflecting a slowdown in hiring. While this indicator often correlates poorly with the non-farm payrolls report, it could still weigh on the US dollar or raise Wednesday's volatility. The second major publication of the day will be the release of the minutes of the Fed Reserve's meeting on December 18. The Fed lowered its interest rate to 4.5% in a widely expected move. However, markets are now more interested in future policy direction. Traders will scrutinize the minutes for any hints or signals about what lies ahead. Thank you for watching. The next Traders Calendar will be released on Thursday, January 9. See you!